How do I tell people to manage their risk if I'm not gonna do it myself? How do I tell them to follow their stops if I'm gonna, use mental stop and kind of just whatever. It's only 500. It's only $1,000. Like I can't do that, right? So it kind of forces me to become a better trader as well.
Hello, everybody. This is Anthony for Investors Underground. Today, I have the distinct pleasure of getting to speak with one of the most recognized and coolest members within the trading community. Her journey into trading began in search of flexibility and freedom, diverging from the grueling demands within the film and visual effects industry. But the harsh realities of trading quickly became apparent, with no shortage of trials and emotional challenges to overcome, culminating in a loss of over $20,000. Eventually, she was able to find consistency and profitability. Her no-nonsense approach to trading resonates strongly with her global trading community and massive YouTube following of over 1 million subscribers. She is a trader, mentor, and host of Humble Traders podcast. It is my sincere pleasure to welcome Miss Shay Huang, the Humble Trader. Hello, Shay. Thank you for being here and taking the time to speak with me today.
Hey Anthony, thanks for having me, and good to see you again after Traders for a Cause.
Yes, it's great to see you again, Shay. I know we sat down for a panel and I had a lot of fun learning from you and getting to speak with you. And I'm so glad that the larger community gets a chance to hear us speak.
Yeah, I'm excited. Thanks for having me.
Absolutely. Shay, I always like to start by learning more about a person. So if it's okay with you, my first question is, how did you first get interested in the stock market and trading? How did you find it?
It was my last year in college. I was studying film and animation at the time. And that's when I kind of started looking up potentially investing in stocks near my last year of college. And then I officially got into trading after graduating. And then at the time, I'm also looking for work in LA. So just trying to make some side income. That's why I kind of, softly and gradually stepped into trading.
Were you going to into the world of visual effects right out of college? Was that the plan?
Yeah, for sure. The plan is always to look for work on either feature film studio or TV advertising studio. The industry is very cutthroat for someone brand new out of college, so I definitely struggled. And even when I was able to find a contract, sometimes they're as short as two weeks. And most of the time, the contracts will last about 2 months or 3 months, and you have to find a new contract right after that. So if there's gaps in between, 2 weeks, a month, or even 2 months, sometimes it took me that long to find the next job. You basically don't have a paycheck during that time. So that's where during that time I would really trying to pick up trading and trying to see if I can, make some rent money. And at the time trying to enjoy life I was like, what, 21, 22 in LA. I was trying to go to a lot of music festivals as well. So I definitely need a lot more money than what I was able to make at the time during the period where I had some work.
And what type of resources did you come across to help you learn about trading during those early days? Was it all, online? Was it books? Was it a combination of those?
I would say it was probably mostly online. I took a lot of online courses at the time. There's different subscriptions online, as you probably know. A lot of DVDs. I bought some, and then I also kind of shared some with my online trading friends at a time where we couldn't afford, let's say, like a $1,000 DVD, so we'll share half of it and we share the DVD. So I kind of did that for a couple of different services. And it was also a lot of trial and error and trying out different strategies that you learn because everyone teaches different styles of trading, right? So somebody could be really focused on trading OTC penny stocks, and I will try that. But somebody else is probably trading options, so I'll try that too. So in the beginning, it was very hectic, but it was not due to a lack of resources online. It was due to just way too many choices, and you're kind of overwhelmed with different styles of trading.
Absolutely. Yeah, there's almost no
Yeah.
shortage of different trading styles that, especially young traders can be overwhelmed by out there. And so were you
Yeah.
trading live money at the time? Your own savings?
I think I traded 3 days in paper trading, and I thought, okay, I got this. Let's start trading live money. Yes, it was with my own savings and whatever I was making at the time from my contract work. But the good thing is, even though I kind of jumped into live relatively quickly, I never risked that much. So per trade, I will risk maybe $5, $10. 50 would be a big trade for me, $50. So I think that's the silver lining, even though I kind of messed up a lot in the beginning. I took really, really small share sizes.
During this time, did you sort of have a eureka or, light bulb aha type of moment where trading started to click for you and you began to think maybe this is something you could do long term?
I didn't go into trading trying thinking that okay, this can be my long-term career to replace my job in VFX at the time. That wasn't really a thought until year three. In my first 2 years, I was always struggling. Lost a lot of money, especially the first year. But I would say during the 2 years is where like I realized sometimes things really work, and I really study the winners and how they were different from my losers. So during that 2 years is where I discovered risk management. When I say discover, I mean like actually implementing it. People always talked about it online, but I never listened. So the when I started actually following risk management, making sure that my profit, if I'm taking the trade, is potentially 2 or 3 times greater than my risk. That's when I started seeing some gradual progress. Nothing was overnight. So that's number one. And the second thing is I started journaling my trades and actually tracking my win rate and risk reward per trade, per different setup, I mean. And, like I said earlier, in the beginning, you're trying out 10 different strategies, right? That's taught in 3 different DVDs. Then I actually started tracking them and realized, okay, like there's only 3 out of the 10 that actually work somewhat consistently. So I stopped trading everything else. So that's why I started to find focus on the kind of stocks I like to trade and the kind of setups or strategies I like to trade. So that's another thing. But during the 2 years, first 2 years, even though I discovered both of those things and started implementing them, it was a very slow process in which I started losing less and less. I didn't necessarily make more and more money right away, but just by losing less, you can like the P&L curve at the start, it's like a huge dip, right? But it's like a slow, gradual progression back to that red to green point. So that was when I realized that not necessarily this can replace my job, but hey, this trading thing, this could actually work, right? Like maybe not to replace my job, but it can definitely pay rent or help me pay the bills, student loans. So that was kind of the gradual aha moment or process during the first 2 years.
Okay, great. Yeah, trading is one of those industries where break even is almost a success by itself.
Yeah, for
And
sure.
and so implementing risk management and journaling were some of the things that helped you. Um, in terms of how you were able to sort of break even, what type of setups were you finding the most success with at that time that I would assume, and correct me if I'm wrong, became eventually your strategy? What type of setups, were you looking to and having success with?
Well, first 3 years I was trading part time. And a lot of my strategies that eventually worked out for me were those that either, if I, at the end of each day, in the evenings after work, I'll go in and scan for the top gainers on that particular day. And that's when in the evening, I'll research a catalyst. Is it an earnings play? Is it like biotech, phase one, phase two, phase three? So I'll do my research the evening before. And the next morning, then I plan to buy the dip. I'm always long bias in the first 3 years, pretty much, because shorting wasn't really an option for me at the time. But by figuring out which kind of stocks have the most likelihood to bounce or continue trending up that breakout the second day, that's where I focus the majority of my time on. Just basically buying the dip, either, the second day, if it gaps down to like a particular support from the first day, then I'll buy the dip there. Or the second scenario would be if the second day it continues to break out through the first day's higher day, and look at a daily chart if there's room to go, and how, depending on how good the catalyst was, then that's when I'll keep on buying the dip as long as it breaks through the first day highs, and then ride it out until I have to go to work, pretty much.
Okay, great. Yeah. It sounds like you had a lot of specificity in what you were looking for. Do you attribute some of that to the journaling that you were doing?
Yes, I think it's from journaling that I realized if I long stocks that have fundamental news, then the likelihood of that long setup to succeed is a lot higher. And also the likelihood of kind of like the range of that breakout to continue, the range will be higher. Like the reward part is higher than if you were just trading any random stock for the technical reasons. So the reward is a lot higher, and the risk is probably the same, but the reward is higher and the success rate is higher. So that's definitely from a result of tracking the stocks I trade and my own like personal results trading those setups. And so that's the first thing. And the second thing is probably the most important, is just to stop trading the setups that was no longer working for me.
As time went on and you were able to build your, account, how did your trading style evolve to where it is today?
Every couple years, I've have to not change my strategies completely, but just kind of adapt and make certain tweaks depending on the market condition.
Mhm.
It's only when I started trading full time in year three, the second half of year three, that I was able to get enough, account size to start shorting. So I did start developing some shorting strategies, and a lot of the stuff I learned from the previous DVDs from years ago finally started to make sense for those short selling strategies, and I'll make them my own. So once that's available, I would also have one or two strategies for the short side that I started to implement. So on days where the market is down, then I'll short and focus on those short strategies. And that's say, small caps was my main focus in the first 3 years, 4 years. For small caps, I'll start shorting those the second day. I would say the first 4 years, shorting wasn't as crowded as it is now. So shorting the first day still works relatively well. But that's changed a lot since 2020. So this is what I mean by I have to kind of change certain aspects, not the entire strategy, but after 2020, 2021, the only shorts I do is on second day or third day. So these are like the small changes. The overall strategy is the same, but the timing is different. And the risk allowed is a lot different as well, given the condition we're in. Now, for the long side, so the first 3 years, I mostly focused on longing the mid caps and large caps. I kind of experimented with OTCs and penny stocks, but the longs was just not, at least for my own style, it wasn't as consistent. A lot of it's due to the fact that small caps, well, I know now, but I didn't know back then. Small caps are so cyclical that the longs, they might work for 2 or 3 months of the year, and then I'll just be completely red trading those long setups on small caps the rest of the year. So I didn't know that at the time that they are cyclical. So That's why I stopped trading small caps for long side and focus on mid cap and large caps, the ones with really, really positive catalyst, and go long on those specific stocks. And that worked out a lot better for the small caps. And then, over the years, I kind of realized the nature of small caps, and that's why I start implementing some longs for small caps on the first day breakout if it's the right kind of season for it. And to present day now this year, like things change here and there, but I almost would only short this year specifically, short small caps on day two, day three, and long large caps that are showing certain like reversal patterns on the daily chart. Just because things were so oversold last year in 2022. So yeah, so I mean, sorry, that's a long answer to your question. It just every year things kind of change. Not, I don't change my strategy completely, but I change the stocks I trade. I change the timing, and that's pretty much it. Yeah.
I think it speaks to the importance of traders to understand sort of what cycle we're in and what type of stocks are moving at any given time, and understand that that might not work in the next 3 months or the next quarter or the next year, and to be ready to adapt. Is that agreeable? Something you would recommend for traders to think about?
Yeah, I mean, sometimes it's a matter of changing very small details. Like your overall strategy stays the same. Changing details to, maybe shorting only once it's red on the day, or shorting once it's below the opening high or below the opening price, versus just, picking the top, trying to top tick all the time. So it's just really small details like your entry timing, entry style. Um, yeah. So it's just very small changes. I think most people who are aware of the strategies can do.
These days, what sort of percentage breakdown would you say that you're either long or short on any given day or for the year at the end of 2023?
So 2023, the first half of the year, I kind of measure it by quarter. The first quarter of the year, it was still very much 70 short, 30 long. And that kind of gradually changed over the course of this year, where at the moment, I was just checking my quarterly stats. This quarter, I'm definitely a lot more long biased than short, 60% long, 40% short. So every year is kind of different. Last year, I have to check my stats, but last year, I would say the entire year, I was mostly short biased.
When you think about your style, at least in the more recent times, is there one particular setup or one particular ticker or trade that really speaks to you and you think, highlights is a great example of your trading style?
I'll probably talk about two. The first kind is still very catalyst driven. This is the strategy that's still it's basically almost similar to how I would trade it, in my first 3 years. Like we talked about earlier, like the mid cap or large caps with positive catalysts, either from earnings or anything that's fundamentally changing about the company. On those gap up days, a lot of times those huge gaps up, they pull back, they sell off a certain percentage of the gap. So let's say, a stock gapped up 50, well, it's a large cap, a gap up 10%, and they pull back, retracing 50% or 30% of that overnight gap at the open. I like to try to long those, knowing the catalyst, knowing if the market environment is favoring, SPY, QQQ trending up, then I'll long those on the pullback days. Like essentially the gap up, it sells off. I'll long the reversal on the long side and trying to ride it out to either opening price, or a lot of times the very strong catalyst stocks, they break through the pre-market highs and continue up higher. That's when you have a huge green day breakout day after a huge gap up overnight. So that's probably my bread and butter strategy, even till this year. It's kind of has some small revisions every year, but that's probably my favorite strategy to trade this year. The second one is one like if you look at the crypto stocks like Coinbase, the Mara, the Riot. So I like to trade those stocks that are kind of like the entire sector is moving up together, and you can see it because I was really short bias on them, and earlier this year and the entire last year. But every time it breaks out, let's say 4 day breakout, like you'll see a lot of shorts trying to short them, and then it still holds and continue a higher breakout. So that's where over the years, like I know I used to get squeezed on those kind of plays where you keep on thinking this sector has to come back down, and it just keeps on going. I think Coinbase is up for like 8 days straight now. So during those, once identified that that entire sector is moving like this, every dip just gets bought back up. Even when it opens up with a gap down, like opens up red and you'll still go red to green, that's when I just start buying those gap down days. Either the gap down days or once it goes red to green and along those red to green moves. So essentially you're continuing the breakout, I call it the breakout continuation, specifically on these stocks that have a lot of shorts trapped in them, and they have already broke out for multiple days, and there's just no red days in sight. So that's kind of my second strategy that I really enjoy trading this year.
Okay, great. I think that's a really great set of examples. And just knowing, what works for you and being able to
Hmm.
identify it and capitalize on it, like it sounds, is the case for you. And correct me if I'm wrong, but it sounds like that's definitely something you took the time to understand in your trading and part of the reason that you are so successful.
Yeah, and then but I think the downside to those two strategy, and a lot of the strategy as trade is that, well, I don't know if there's really one strategy that you can find every single day, but a lot of my strategies, they don't happen every day. So so I think that's the downside, but I also kind of accepted that there are gonna be days where I don't see any perfect strategy that fits, and I can't trade that much. So that's the downside. But yeah, I think a lot of it is just from I save a lot of charts. I screenshot my charts every day, and every other day I'll journal those and track those trades, and that's where I know, okay, like things are starting to look good for the strategy at the moment, or okay, this month is just not it for this particular strategy.
That's interesting. And one of the questions I have is, how do you prevent yourself from sort of over trading? What do you do when you're not actually trading? What does that all look like for you? Because I know a lot of traders out there and listening probably have an issue where they're over trading and they're looking every single day for a setup that they're familiar with so they can hammer the button and be in a trade and all the excitement that comes with it. So how do you prevent that from happening?
So besides tracking what trades that worked out, I think it's important for traders to track their behavior on the losing days. So what I found out from my personal performance is that on the red days, I tend to have way more trades than the green days. So that's when I realized, okay, like, let's say my green days, for example, average about 5 trades. And on my red days, I'll have 10. So that's when I realized, okay, like I tend to try too hard on the red days. So let's say if I'm long bias on the red days, it probably just means the entire environment is not favoring longs. Like today, market sold off, right? So today is not the day for me to try to buy the dip or trying to like, buy those reversals. So it's about understanding that and kind of actually track your day-to-day performance, and analyze the red days and your losers versus winners. So I know that, so on my red days, I tend to trade, 2x more trades than I should. And then also track how much money that has lost you because of that. So I know that I tend to lose, I used to lose a lot of money on those red days where each one of the trade will be, my proper risk. But just because I overtrade, there'll be 10 trades instead of five, that risk amount definitely got blown out. So once you see how much money you're losing because of that, then I think naturally you'll kind of remember that and start, trading less. So nowadays on my red days, I have this rule that if I have three, maximum four red trades in a row, I know this is just not my day, and I'll stop before I get to that point where I just keep on trying and trying to make something work. Where today's just not the day for my kind of strategies.
That's interesting. And do you stop for the day and basically shut down, you know, the computer for the most part and take a walk? Is that sort of how you handle those situations so that you don't, get an even more red day?
That really depends on how disciplined I am in the morning. I mostly trade until about um, 12, the latest market time. And sometimes if I'm really disciplined, I stopped after two or three trades in the morning. And I look at the market, I follow my rules in the morning. Then that's for me. If there's something else in the afternoon, I will still trade it knowing that in the morning I was disciplined, I followed those rules. So if there's opportunity in the afternoon, then I will take it. If it's a good opportunity. If it's a setup that fits. But if I broke all the rules in the morning, there's no way I'm gonna follow it in the afternoon. So that's when I actually shut it off and don't even look at the market anymore. So there's a lot of like depends on how well I performed, not in terms of P&L, but in terms of if I traded my setups, follow my rules in the earlier part of the day, then I'll give myself permission to trade it afternoon.
Speaking of morning and afternoon, is there a certain time of day where you are more active? It sounds like, and correct me if I'm wrong, but you spend a lot of your focus and energy on the mornings. Do you ever
Mhm.
trade, the afternoons or the end of day at all? Or is 12 o'clock basically your cutoff time no matter what?
I think it's because I started out trading part time. So I'm on the West Coast. So market opens at 6:30 a.m. my time, and I need to be done by 8:30. So I think it's because of that nature. Most of my strategies I've developed and traded over the years are mostly pertains to the first half of the day. But starting in 2022, just because last year market was quite difficult, I've started doing some afternoon strategies where I'll long the reversals. So only that one particular strategy, if I trade it, then I'll be trading that in the afternoon. And only one long strategy for that, and one short is when small cap very extended, when it sells off for the entire day. Then I wouldn't necessarily place new trades in the afternoon, but I'll definitely stick around to watch my position and watch it unwind if I'm deciding to hold it through the rest of the day. So I will stick around for that. But yeah, to answer your question, 90% of my trades are placed in the first half of the day, in the morning.
It sounds like you have a pretty well thought out routine. Can you talk about the importance of having a routine, whether it's a morning routine or just a trading routine, some sort of, path that you follow every single day, over and over to sort of get you in that mode, in that zone of trading and trading well day after day?
Without some proper steps before I start pressing buttons, and I'll feel really lost and really not understanding what is going on exactly in the market. So whether I show up at my time is 4:30 in the morning, that would be like 7:30 a.m. market time. Whether I show up 4:30 or sometimes I to accidentally sleep through my alarm. Whether I show up at 4:30 or I show up at 7:30, I always make sure I kind of at least scan the market. So I have a scanner. I look at all the gap scans. If there's a lot of gappers, I know it's probably a very green day for the market. If there's no gappers, then I probably know that okay, this today is probably like how it is today. A lot of stocks are selling off. So I need to at least know kind of the overall sentiment for the market for the day. And now that's just in general. But before I trade a stock, I always need to know if there's any catalyst, whether it's earnings, whether it's just selling off because a lot of my plays are technical, but they are based on fundamental reasons. So I need to know that before I can place any trades. Otherwise, it's kind of trading blind.
Do you have sort of a similar routine for the after hours session? How much time are you putting in, after the market closes, looking at stocks and what has moved and thinking about that maybe for the next day? What does that look like for you?
Yeah, so I try to at 4 p.m. Eastern just to shut it off first, and I'll go out, go do my own thing. I'll come back in the evening to that's when I kind of want a break right after market close. And I'll come back, fresh in my mind to kind of start reviewing my trades. So what I do is the first thing I do is I look at the stocks I traded today, how I could have done better, where it ended up going to. Did I sell too soon? Did I sell at the right time? So all of that gets recorded and journaled. Now, then I will move on to the stocks I did not trade. But maybe it's something I found out a lot of people are talking about. Maybe it's a stock I missed. Then I'll look at, okay, you know, how can I make sure next time I don't miss it? Number one, or if the stock is still valid for a play tomorrow, then that kind of goes back to what I used to do. In my first 2 years, is that in the evenings I'll look at top gainers, right? So even though that day I didn't trade it, I'll plan it to trade it the second day. So I'll still do the same thing, even though it's been 9, 10 years. Now, if the top gainer is still valid, I think the catalyst, I like it. I look at whether it's earnings, any kind of corporate news, fundamentally driven. Then I'll look at it to see if tomorrow whether it can be a valid long or a valid short, depending on the situation. And after journaling my trades, after analyzing the stocks I did not trade, that's pretty much it. In the evening, this will basically take me about half an hour in the evenings, and it's very very much worth it because you're basically building half of your watch list for the next morning already.
Whether you're looking to improve your trading routine in the pre-market or the after-hours session, or simply take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused traders sharing their trade ideas in real time every single day. You'll also have access to the updated morning broadcast where Nathan Michaud and other members of the IU community provide detailed trading plans in the pre-market session. You'll have access to the midweek study session with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with Shay, the humble trader. One of the things I wanted to talk about was your general approach to risk management.
Definitely. I think in the beginning, I was just risking, well, before when I didn't have risk management, I was just at the time, trading 50 shares, 100 shares for any stock. So then I realized, okay, I should probably change my share size, position size, depending on the risk I'm taking. So at the time, if I'm risking, $20, trading $100 stock, it'll be this size. If I'm trading a $1 stock, I'm still risking the same $20, then the size will be this much. So that's definitely the beginning. I think that's where I recommend most people to start risking a set amount for all the strategies. But once you have, let's say, 2 months worth of trading journal and data based on your past performance, then you can start risking more on the strategies that you trade better at, with either the most win rate or the risk reward is better. So maybe risk 5 times more or 2 times more to start. So that's kind of where I steadily build up. Okay, strategy A, I'll risk, let's say, $100. Strategy B, I'll risk $500. Strategy C, I'll risk 1,000. And for each of those strategies I'm trading, depending on the stock price or the amount of risk allowed, the share size will be different as well. So that's kind of present day how I do my risk management. And another thing that I started implementing after 2022 is that it was a much tougher year, I would say. And I think I adapted a little bit too slow in 2022, where in the first half of the year, I was still risking the same dollar amount in general for those strategies. Even though one can be 1R, one's 2R, one's 5R, the base risk was still the same as 2021. So that was a huge mistake I made. Then I realized, I don't know why I didn't realize this sooner. In June, July, when I started reviewing my first two quarters, I realized, oh my God, I need to like downsize so much more. So I downsized, probably 50%, sometimes 70%, depending on the strategy, for the second half of last year. So that's when I realized I also need to shift my risk, the base risk, pertaining to how the market's doing and how I'm performing on the year. So last year I really downsized. This year, I always go through different quarters thinking, okay, this quarter, last quarter I performed well. If things go the same way, I can increase it a little bit. Or in the summer of this year, I decreased the base risk again. Now winter, December, I knew I wasn't gonna trade a lot. So I did decrease my risk again for December. So that's kind of like different layers of how I manage my own risk. And especially now that I have the podcast, I was talking to a lot of different traders, and they kind of echo the same sentiment where you should risk more on your A plus strategy and downsize if the market environment is not in your favor. So I'm really happy that I kind of finally have this kind of system in place, especially after 2022, which was quite a difficult year.
That's really interesting because, and correct me if I'm wrong, but you are not afraid to size down even up to 70% if that's what needs to be done in order to protect your capital. That sounds like an extremely mature, if I could use that word, and wise thing to do, where some maybe newer traders might think that, just because you have built up a certain amount of capital that you can continue to risk what you've been risking. And it sounds like, that's what helps you stay in the game with as much capital as you have, which is to preserve it. Is that accurate?
2020 and 2021, everyone was making so much money, so nobody would have to think about downsizing. But I think this year, whether people admit it or not, or this year and last year are the years where by trading less or downsizing, at least for me, I actually find myself trading better. So that's what works for me personally.
And you're not alone. I've heard a number of really successful traders say very similar things for 2023, that they're not trading, with as much size, or they're really focusing on their risk for this year. So, I mean, it definitely sounds like you're in good company on that front. Something else I wanted to mention as well is your podcast. Since you mentioned it, can you talk a little bit about, what inspired you to start Humble Traders podcast, and what that experience has been like, and what you've learned from some other traders that you've gotten a chance to interview?
I went to Traders for a Cause last year in fall, and that's where I really started to connect and make friends with a lot of the traders I look up to online or admire. And I think that's also the first time I was surrounded by that many traders. So that's when I kind of realized, hey, like, now that I'm friends with a lot of them, it'll be great to have their perspective on my YouTube channel. And also, before this, I've been doing my YouTube channel since 2019. It's fun, and I really appreciate the journey, but eventually, oh my God, I got so sick of just me making videos. So I just also selfishly wanted a change in terms of pace and in terms of my content. So I never want to become bored of my own content. So I just wanted something new. And the fact that, I met so many traders at Traders for Cost in 2022, that kind of gave me the idea that, hey, why don't I, bring them on the podcast and have an interview? Why don't I share their stories, and, I can learn from them, and so can my audience. So that's kind of where, that's probably the proudest accomplishment for my YouTube channel I have this year, is that, I featured many different traders, and everyone loved the podcast. Oh, maybe not everyone, like 98% of the people love the podcast. And not only does it fulfill my curiosities about these questions I have for very successful traders, and also helps the audience members as well.
You could put me in that class of people who absolutely love, the podcast. I watch regularly and watch your YouTube channel. I highly recommend that for everybody listening if they don't already know about Humble Trader on YouTube. Over 1 million subscribers for very good reason. Just full of lots
Thank you.
of educational material and with, a no nonsense, real approach to trading and what it is and what you need to succeed. Um, so, in addition to your YouTube channel, you also have the Humble Trader community. Can you talk a little bit about what inspired you to start your community and, what it's like to be an entrepreneur in addition to trader?
Yeah, my community was started after my YouTube channel. So in the beginning, I think this is when I had 10,000 subscribers. I had a free Discord room where anyone can join. And at the time, I had a cap at like 100 people, but it's all free. So that's why I kind of started moderating it, creating watch lists. We'll trade together every day. Then, as people love it, they keep on requesting additional features, such as, hey, maybe each morning you can, show us what you're looking at pre-market. So I'll hop on the mic each morning and kind of talk about my game plan for the day. So the more work that's like more effort and time I put in. That's why I realized, okay, like, this is great. Like for free, it's fine, but I need to start charging a little bit just to maintain the quality. Whether it's hiring people to moderate the Discord or hiring people to also help me, other traders who help me with ideas. So that's kind of the start of the community. Started out as free, then eventually we started charging $50, $100 per month. But anyone who's there from the beginning, there's still people who are not paying anything, and that's totally fine because they were with me from like 2019. So that's where it kind of started. And I do think that the more I teach and have to support people on Discord, the more game plan and the more support and guidance I have to provide, that kind of holds me accountable to have to trade better. Because how do I tell people to manage their risk if I'm not gonna do it myself? How do I tell them to follow their stops if I'm gonna use mental stop and kind of just whatever, it's only 500, it's only $1,000, like I can't do that, right? So it kind of forces me to become a better trader as well.
That's excellent to be able to, grow a community like that and then also, be responsible enough to lead by example, which is very commendable.
It kind of forces me to kind of keep like be earlier with adapting and changing, revising my strategies. Because I know there are people who trade similar to as me. If they learned that, say, the gap up reversal strategy from me, then if that changes, I want to let them know as soon as possible. So even though I think I was too slow to adapt in 2022, this year I'm really proud that I've changed how fast I adapt and how fast I'll tell people that, hey, this strategy is working out last month, but this month after earnings is not working out as much. So it kind of, I do feel the obligation and responsibility that if things change, I need to tell people and just to warn them to make sure they can stay afloat and not expecting every strategy to work every single day.
You mentor a lot of traders. One of the questions I have is, are there certain characteristics or personality traits, things that you notice about those who you are mentoring that tend to lead to them being successful and doing well in trading?
Definitely. I think the first thing is the people who are resourceful, they tend to do well because before they come up with a question, I can read from our conversation that they already did their homework. They already tried maybe solution A or B, maybe it wasn't working. That's why they come to talk to me for solution C. So the people who are resourceful, who would actually do the research on the stock before coming in to talk to me that, hey, why is the stock up in the first place? Maybe their question would be, hey, the earnings is actually pretty good. The guidance, they guided up 20% more. Why is the stock still tanking the last couple of days? That's a much better question than someone coming to talk to me, hey, why is the stock down the last 2 days? So I think that's the number one difference, just being traders who are resourceful, and who would look for either free resources or just resources we already provide within the community. So that's the first thing. I think the second part is, it's a little bit hard to say this, but people who are financially struggling already before trading, they're gonna struggle even more, generally speaking, after they start trading. Even so, that's the second thing I realized, that the traders who tend to be able to stick around long enough to go through that deep red and then red to green curve, they need to have keep some sort of income source, a job or multiple side hustles on the side, or have a spouse who will support them, if so they are not depending on trading as their only source of income early on. So those are the kind of people who are more likely to succeed. So that's number two thing. And number three is just the people who are willing to spend the most amount of hours tracking their setups, tracking different stocks on the weekends, on the evenings. The people who are willing to put in so much more work than most. Those are kind of going to be the people who will succeed eventually.
That makes a lot of sense. And, I wanted to highlight the importance of not having to depend on the trading income in order to pay the bills or, keep the lights on or anything like that. When you began trading, it sounds like you sort of built sort of a nest egg. You had some financial padding so that you weren't entirely just focused on your trading resources, and your profit in order to maintain your life. Can you talk a little bit more about the importance for traders, to be able to have some sort of, income or, financial stability, and not just have to depend on the market or something, going to the moon in order to be able to just, live comfortably?
Yeah, for sure. I think in the beginning, when I first started, I even though I was struggling to find work many times, when I do have work, I try to save a lot of that income, so that definitely helped a lot. And then when I was finally trying to quit my job, I made sure I have 1 year worth of savings in my bank account. So that's when I realized, okay, I'm okay taking that risk, because at least for the next 12 months, I'm going to be fine. I'm not going to be living lavishly, but I'll be fine. I won't struggle to pay rent. So I think that's definitely very important. And even now, if somebody is coming to talk to me about quitting the job, I make sure that I tell them that, hey, like, you need to make sure you have money saved outside of your trading account, whether it's for rent, food, utilities, and all that good stuff. So that's very important. The people who, I think another thing, that's generally why a lot of the traders you see that succeed, they are all relatively young and stupid, I would say. Like, I was young and stupid. When I was 21, I didn't know, what the risks are. I just know that at the time I didn't have that much to lose. I think if I was to start trading now, if I am starting to trade, like, I probably wouldn't be able to take that kind of risk and actually quit my job. I think does get tougher down the road if you want to quit your job, but I think you can prepare for it. I'm not saying once you have a solid career or like a solid income, you cannot quit your job to trade, but I think you just have to plan for it. At least 1 year of savings outside the trading account, and ideally a backup plan. If let's say your trading doesn't work out, then you can still possibly go back to your job.
What would you recommend in terms of those who want to transfer into trading from their existing path?
I think especially after the pandemic, so many jobs they offer 1 or 2 days to work from home. So I know in my community, half of the people are working from home. So even though they are technically working, that's kind of, they have a decent amount of time to monitor their trades. So I think that's the best of both worlds, where you can trade part-time and still, man, obviously like do your job, but like you can shift things around where you possibly start your actual 9 to 5 job at, 12 or in the afternoon. I know people who are doing that, and that's worked out greatly for them. So they'll trade part time from open till 12 p.m. Then they go to their job. So I think that's the best situation. I don't recommend anyone to start out trading full time right away. Work from home wasn't an option for me when I was considering quitting my job years ago. So if that was an option, I probably never would have quit my job until the figures are significantly higher than my salary at the time. So I think now it's a great timing too for people to start trading part time if they are able to work from home.
What role does trading psychology play for you, when you're looking to get into a trade and stay in a trade and just in general?
I would say there's two different kinds where the first kind would be if I'm on a winning streak, then that's the time to keep pushing. I know there are people who say, oh, a lot of times your biggest loss will come after your biggest win. I agree with that. But I think if you're on a winning streak, that means many things. Your market environment's favoring your setup. So you should keep pushing until it doesn't work. And don't be scared that you're gonna lose the profits you generated. A lot of times after traders reach a certain point, they're too scared to keep pushing, and because they think they have a lot to lose, which is true, but that also means, at least the way I see it, is if I'm on a winning streak, I will keep pushing until I retrace a certain amount, then I'll stop. So that's the first thing. At least that's where I really applied this year, because last year I was so scared of losing any profit I have, just because last year the environment's tougher. Coming into this year, I realized, hey, like if I'm on a winning streak, I want to keep pushing until that doesn't work anymore. So that's the first thing. The second one is, this one is easier for people to understand, is if you're in a losing streak, which we all go through once a while, if you're in a losing streak, downsize, and then yes, trade conservatively. So it's the exact opposite of, as if you were in a winning streak. So downsize, be very conservative. I'll downsize sometimes to 10% of the risk if I have to, just to build back my confidence. So that's what I would do, because this just from the experience over the years. For me personally, when I'm in a losing streak, if I push it, I lose even more. If I'm in a winning streak, if I don't push it, then I just kind of eventually plateau. So that's kind of what works for me. Just a lot of it is also from like analyzing my past journals and my past performance to kind of understand what works the best for me. Now, dealing with losses is another aspect of the trading psychology. If it's a big loss, let's say my original risk is one and the loss turned out to be 10, I'll definitely shut down for the day, and maybe shut down for the week if it's really that bad. So that's probably the easiest, well, not easy, but that's probably the best way for me to recover, is to take time off after a big loss. So yeah, that kind of echoes the fact that if I'm in a losing streak, downsize, or if I needed to, I don't need to this year, but like there was a period of time in the first 3 years, if I was, in a losing streak, I actually go back to paper trading. So that helped a lot too in the beginning, and it's something I still recommend people to do.
I think that's important to hear, that you're not afraid to go back to paper trading or even recommend people think about paper trading. I think there's sort of a negative stigma that we hear sometimes about, oh, this person is just a paper trader, or they're paper trading right now. Therefore, they might have had such a loss that they'll never be back, to trading at their old level. But maybe paper trading is a way for people actually to stay positive, mentally, and preserve their capital so that they could come back and have, a next big quarter or year.
Yeah, I think it's a quick and easy way. It's either paper trade or downsize a lot to still for the same trader to realize, hey, my strategy still works. I may have taken that one big loss, but if I go back to the basics, if I size down, I can still trade my strategy properly. Sometimes people just need to establish that confidence back to get on track.
Is there anything that you do away from the trading desk that you believe helps you, as a trader when you're back on desk and focused on stocks?
Yeah, so I really believe in working out, and also I do a bit of extreme sports. So my reasoning for that is, so I do pole dancing, which is very like it's a dangerous sport to be honest, because a lot of times you're upside down, you're holding your own entire body weight with one arm, so it's really dangerous. But at the same time, it's my way of taking huge risk outside of the market. So when I trade, I kind of get that adrenaline out of the system. So when I trade, I don't need to do anything crazy to kind of show off or to try my luck, if that makes sense. So that's kind of what I do. I also go to the gym, which is not as risky, but I also do that. It's a good way to kind of train your body, train your mind. So when you're trading, you can, you can like go through that stress. You can withstand a lot of pain. That's very important. And yeah, so I like to make sure if I'm taking risks, like huge risks, I want to do it outside of the market.
Thank you. I think that's actually a very interesting perspective. Why would you use your trading and your capital as the place where you get your risk, especially when there's no real positive health benefits for it, whereas you could be taking risk outside of the market doing extreme sports and you have the best of both worlds. You're still keeping your capital and you're able to, take chances and get an exercise, a workout, get your blood flowing, dopamine, and things like that. That's actually really interesting.
Yeah, I mean, in trading, we all need to take risks to make money, but I'm talking about like risk where it just doesn't make sense. Like I don't want to do that in trading
Hmm.
at all. Yeah, so besides working out, I also I used to do a lot of skydiving too, like in Hawaii, in Taiwan, or in like Vancouver, and we can you can do bungee jumping. I used to do that a lot too. Not so much this year, but yeah, that's another way I like to kind of live outside of the market.
Okay, that's great. And do you believe there are any misperceptions about trading that people have, whether they're actual traders or people who don't know anything about trading that sort of have these, misconceptions and misperceptions about the markets?
Yeah, I think people tend to underestimate how much time it'll take to make it work. So that's why I think being young and being stupid actually helps a lot if you're starting out. Where, sure, in the beginning you thought you only need 2 months, but if it does eventually take 2 years or more, you wouldn't necessarily give up. Because I think trade like for me it took me 2 years and really three to make it actually work. So if you think about it, not a lot of people would be stupid enough to stick with something that's losing them money and draining them mentally and giving them so much stress for 2 3 years straight. So I think in the beginning you kind of have to be naive and be a little bit stupid to make this trading thing work. That's why I think the traders who make it, I mean, that's like we're not necessarily the smartest people, right? We don't need to be smart to make it in trading. You just need to be super determined and if like oh, but also have a vision to see it the light at the end of the tunnel. So that's what I think. But of course, like if nowadays I try to tell people, at least on my YouTube channel, that hey, if you want to get into trading, you need to commit minimum a year or two to make it work. Like if it doesn't work, after 6 months, you're not gonna give up right away, or you're not gonna blame the market. Oh, it's the market that doesn't work. 6 months, I'm still not making money. But if you go into trading with the right expectations, knowing that it might take you a year or 2 years, you're gonna have a lot higher chance of surviving that, just because mentally, you shouldn't expect to make a lot of money right away. So I think expectation is very important for people to have the right kind of expectation if they are getting into this kind of business.
Okay, thank you. I think that's extremely helpful, is to set expectations for how long it's going to take possibly to be successful in trading. And Shay, if it's okay with you, I'd love to go through a lightning round set of questions, just pretty quick questions, pretty quick answers, if that's all right.
Sure. Okay.
Cool. My first question is, what do you consider to be your greatest strength as a trader?
Fixing my strategy or adapting my strategy to fit the current environment.
Is there anything that you're currently working on to improve about your trading and your trading strategy?
Yes, I'm actually revising my hotkeys for next year. Just this morning, I was revising my hotkey to make sure I'm more efficient with entering entries and exits.
Are there any technical indicators that you favor on your charts that help you make trading decisions?
VWAP, been using that for years, but also this year I added the 8 EMA for momentum indicator.
And if you could go back to the start of your trading journey and give yourself one piece of advice, what do you think it would be? And do you believe that you would listen to your own advice?
I think I would tell myself to paper trade a little bit longer than just a couple of days. But no, I don't think I would have listened. I know myself. I was very young and stupid. No, there's no way I would have listened.
And is there anything from your days working in visual effects that you believe carried over or you're able to apply to your trading?
Yeah, so in visual effects, there are days where like you're sitting in front of a computer working and the director comes in and tell you you have to redo everything. So we for those kind of days, we just kind of just like shut it down and we go to the break room and take a shot and go back to work. So that kind of applies to trading in some sense where there are some days the market just says nope, you cannot make any money. So I kind of accept that just like I did back in the VFX days. I used to do take some shots, but I don't anymore. Getting too old for shots nowadays. But I'm very good at realizing today is just not my day and stop trying to make it work.
And what has been your most memorable moment in trading so far?
I trade with yes my community, but also within the community, there's a group of people I talk to every day in DMs. So some of those are the trading coaches, and some of them are members I consider friends. So I think there was a moment when we were trading Coinbase last year. You know don't know if you remember that crazy day when Coinbase went parabolic from 70 to like 135 pre-market, and then like at the open it spiked and dumped. So I remember that was really fun because we are I was short bias on Coinbase, but there were people long bias on Coinbase. But we were able to all make money because our strategy, while it's different, the timing is also different. So just because somebody long pre-market and sold into the open, and I shorted it after the open and rolled it back down, that doesn't just because I'm short bias and long bias, that doesn't mean one of us is wrong or one of us more right than the others. It just talks about, like in trading, there's so many different ways to make money. And I think it was just a really, really fascinating day that, I was really pleasantly surprised that somebody took the other side and still made a lot more money than me.
What piece of advice would you give to those listening who might be struggling in their trading journey, either to find consistency or profitability?
It's tough to give people one advice, but I would say really look at how your journal, like what your journal looks like. So when I say journaling, I don't mean just write down entry, exit, and how much money you made or lost. I mean to screenshot your trades and really track each strategy. So each trade should pertain to a specific strategy. I would say really go to your journal and analyze your stats and look at which strategy is losing you the most money and which strategy is making you the most money. And really just to focus on that one while you're building up your confidence and stop trading anything else.
Last question. For those who are listening that want to learn more about you, your trading style, or maybe even contact you, how can they do so?
They can check out my YouTube channel, Humbled Trader Online, or check out my website, humbletrader.com.
Shay, thank you so much for taking the time to chat with me today. It's been a pleasure getting to see you and talking to you again. Thank you so much.
Thank you, Anthony. That was very fun. And thank you guys for listening.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.